Bloomberg Audio Studios.
Podcasts, radio, news.
The story of the UK is an economy that has got real momentum.
What is broken can be repaired. What is ruined can be rebuilt.
UK inflation is becoming much more homegrown.
We have huge potential as an economy in the UK.
This is a time to tell Israel there is a path to peace.
Our plan for the British economy is working, but the work is not done.
Hello, you're listening to Bloomberg UK Politics. I'm Caroline Hepker.
And I'm Stephen Carroll. After weeks of speculation about what he might have in store, Budget Day has finally arrived. The Chancellor has outlined his tax and spending plans. We have highlights of his speech, the response from the Labour leader Keir Starmer, and analysis from our Bloomberg colleagues for you. Let's start with some of what we heard from Jeremy Hunt.
Madam Deputy Speaker, in recent times, the UK and the UK economy has dealt with a financial crisis, a pandemic, and an energy shock caused by war in Europe. Yet, despite the most challenging economic headwinds in modern history, under Conservative governments since 2010, growth has been higher than every large European economy. Unemployment has halved. Absolute poverty has gone down, and there are 800 more people in jobs for every single day that we've been in office. When the Prime Minister and I came to office, inflation was 11%, but the latest figures show it is now 4%, more than meeting our pledge to halve it last year. And today's forecasts from the OBR show it falling below the 2% target in just a few months' time, nearly a whole year earlier. I now turn to growth. Just after I became Chancellor, the OBR expected GDP to fall by 1.4% in the following year. In fact, it grew, albeit slowly. Now the OBR expects the economy to grow by 0.8% this year and 1.9% next year, 0.5% higher than their autumn forecast. After that, growth rises to 2.2%, 1.8% and 1.7% in 2028. Since 2010, they don't want to hear this, but these are the facts. Since 2010, we have grown faster than Germany, France or Italy, the three largest European economies. And according to the IMF, we will continue to grow faster than all three of them in the 5 years ahead. But I remain concerned that other markets, such as Australia, generate better returns for pension savers with more effective investment strategies and more investment in high-quality domestic growth stocks. So I will introduce new requirements for DC and local government pension funds to disclose publicly their level of international and UK equity investment. I will introduce a brand new British ISA, which will allow an additional £5,000 annual investment for investments in UK equity with all the tax advantages of other ISAs. The government will abolish the current tax system for non-doms, get rid of the outdated concept of domicile, because we have asked those with the broadest shoulders to pay a bit more, today I go further. From April the 6th, employee national insurance will be cut by another 2p from 10% to 8%. And self-employed national insurance will be cut from 8% to 6%. It means an additional £450 a year for the average employee, or £350 for someone self-employed. When combined with the autumn reductions, it means 27 million employees will get an average tax cut of £900 a year. But dynamism in an economy doesn't come from ministers in Whitehall. It comes from the grit and determination of people who take risks, work hard and innovate. Not government policies, but people power. It is to unleash people power that we today put this country back on the path to lower taxes. A plan to grow the economy versus no plan. A plan for better public services versus no plan. A plan to make work pay versus no plan. Growth up, jobs up, taxes down. I commend this statement to the House.
So that was the Chancellor Jeremy Hunt announcing his budget. Now we're going to listen to the Labour leader Keir Starmer for his response to the measures that we've just heard from the Chancellor, announcing a range of decisions around tax and spending and a major political moment for the Conservative Party. We'll stay in the House of Commons to hear next the response from Keir Starmer as we are waiting for the opposition leader to take to his feet in the House of Commons.
And so as we wait for Keir Starmer to speak, a couple of the points that the Chancellor made. He is cutting UK national insurance by 2 percentage points. That was the headline that we were expecting, and it arrived in this speech that lasted, I would say, just over an hour. So the Speaker's standing up and still introducing the opposition leader. The very first televised budget in the UK was back in 1990. I think this perhaps was one of the most heckled in all of that time between Jeremy Hunt and Keir Starmer. Non-doms, the Conservative Party talking about scrapping and abolishing the non-domiciled tax status, a Labour Party policy that they tried to own for themselves. Now, it took a bit of time for this budget to get going. It really wasn't until the end that we had the goodies, as it were. Now, the fuel duty, widely expected. So the Chancellor maintaining the 5p cut, the freeze to fuel duty, and that's been many years ongoing. And so that remained, but it didn't come without a little kick to the Labour mayor. The Chancellor talking about how the Labour mayor is punishing voters with the ULEZ plan, punishing drivers, rather, was his view. So the fuel duty plan, that stays in there. Also, the freeze to alcohol duty, that remaining in place, benefiting 38,000 pubs. This, I think, spring budget was notable for during the heckling, the name-checking of so many MPs, councillors and constituencies. It had a real pre-election feel, I think.
We've got Dave Goodman from our Markets Today team joining us now with some instant analysis of what we've heard from the Chancellor. Dave, first of all, just for markets, we were talking about things not moving very much on the back of this, but the reaction of what we've seen, has there been much in there for markets to react to? Not
a great deal so far, Stephen. I mean, we've seen a bit of movement right at the tail end of the speech after the DMO released its borrowing figures and saying that it was going to borrow it was aiming to sell slightly more gilt than the market was expecting going into the budget. Aside from that, I mean, we were just talking about that over here, and I think almost all of this budget was kind of expected, right? We had the national insurance cut was really the big rabbit, and there wasn't really much beyond that to get markets overly excited. Things like the child benefit changes were perhaps a surprise, but they don't move the needle, obviously, in a massive way economically or in terms of spending. So, yeah, I think the big picture was this was a budget that was pretty well briefed out beforehand, and Hunt delivered that and didn't go further and didn't give investors any nasty surprises. OK, Dave Goodman, thank you very much for joining us from our Markets Today team. We've heard from the Chancellor Jeremy Hunt. Let's listen in now to the response from Labour leader Keir Starmer.
Despite the measures today, the highest tax burden for 70 years. The first Parliament since records began to see living standards fall, confirmed by this budget today. That is their record. It is still their record. Give with one hand and take even more with the other. And nothing they do between now and the election will change that. But most insultingly of all, the British people know the only cause that gets this lot out of bed is trying to save their own skin. Take the desperate move after years of resistance to finally accept Labour's argument on the non-dom tax regime. Has there ever been a more obvious example of a government that is totally bereft of ideas? And if they're sincere in support of this policy now, then the question they must answer today is, why did they not do it earlier? When the Chancellor says Britain has grown more quickly than countries like Germany over the last 14 years, I'm sure they will be shocked to learn that this is a statistical sleight of hand. And when it comes to GDP per capita, in other words, the growth that makes the difference to the pockets of working people, their record is much worse. Indeed, in per capita terms, our economy has not grown since the first quarter of 2022, the longest period of stagnation Britain has seen since 1955. In fact, the Chancellor invited us to look at those figures. The OBR says GDP per capita will be 0.75% lower in 2028 than was they forecast in November of last year. That was the number he said we should watch. 0.75% lower in 2028. And they can call this a technical recession, but there's nothing technical about working people living in recession for every second the Prime Minister has been in power. This is a Rishi recession. And if the party opposite really wants to know what hides in the Chancellor's spreadsheets, then they will see that it's only the record levels of migration they have delivered which has prevented an even deeper decline. And that is the record they must stand on at the election. There will be no change of direction without a change of government. And that leaves Britain a nation in limbo, unable to shake off the Tory chaos that dragged us into recession and loaded the tax burden onto the backs of working people and maxed out the nation's credit card. Britain deserves a government ready to take tough decisions, give our public services an immediate cash injection, stick to fiscal rules without complaint, fight for the living standards of working people and deliver a sustainable plan for growth. So we say to the Chancellor and Prime Minister, it's time to break the habit of 14 years, stop the dithering, stop the delay, stop the uncertainty and confirm May the 2nd as the date of the next general election, because Britain deserves better and Labour are ready.
So that was the Labour leader Keir Starmer's response to the budget announcements from Jeremy Hunt.
OK, let's get some reaction then to Jeremy Hunt's spring budget. Keir Starmer's response that we've heard. Bloomberg's head of economics and politics, Stephanie Flanders, joins us in the studio. Really great to see you, Stephanie. Look, if the Tories had some modest tax cuts to offer, Labour's got quite a lot of material over the past 14 years with which to hit the Prime Minister. What did you make, firstly, of Hunt's budget?
I think, we knew going in that there was this sort of tussle between the sort of safe and steady Rishi Sunak administration post Liz Truss and Kwasi Kwarteng and the more kind of blue-blooded conservative instincts as we get closer to an election. I mean, I would say Jeremy Hunt has probably kind of had, at least on the face of it, he's had the better of that tussle. He wants history to judge him, as a reasonably constructive, pro-growth, pro-business Chancellor as well as a Conservative Chancellor. And I would say, of course, I'm pouring through the numbers now. I've found a few sort of interesting nuggets around public service spending. But by and large, I would say where he's done something politically attractive, he's done, as he did in the autumn statement, he's done it in a way that actually most economists could get on board with. So, national insurance, we wouldn't necessarily have wanted to have the freezing of income tax allowances for many years to come, and the big squeeze on all earners that's come from that decision, which was actually a Rishi Sunak decision. But if you were not going to mess with that tax rise, actually cutting national insurance is a fairly pro-growth, and it's also more progressive than cutting the marginal rate of tax. Equally, I think, the non-doms, transparent political, gesture though it is, it was quite an archaic system. Keir Starmer's, we've been listening to, he sort of has a point that they could have got rid of it a long time ago. But even if it's political reasons, what they seem to have replaced it with, again, looks broadly sensible on its face. It looks like a sort of trade-off that still reflects the fact that London, wants to be attractive for these wealthy international players. So, and even the British ISA, although in some ways it feels a bit gimmicky. I suspect people will transfer money that might have gone into the standard ISA and UK things and just sort of move the money around. Again, it's not crazy given how many, the long-running issue there's been with the city not being great at investing in British firms.
Interestingly, looking at the OBR numbers, they're calculating the Chancellor left himself £8.9 billion of headroom against his key relative debt falling as a share of GDP by the fifth year. This is kind of still treading a very fine line when it comes to how much he could have spent.
Even since 2010, which is,
Yeah.
they've had plenty of revisions since then, but even since 2010, the average headroom that a Chancellor's given themselves is 27 billion. So that shows how tight it is. I think they think there's going to be a 54% chance of them hitting it, which means he's sort of slightly more likely than not to be hitting his rule. And of course, at some level, the rule itself is a really silly one. It allows you to be raising debt every year. All you need to do is show in the distant, fifth year of the forecast that it's falling slightly, but then the next year you push it forward a year, you never actually lower the debt. So, it's certainly something that frustrates me. He recited the pledges that the Prime Minister had made at the beginning of last year, and the Prime Minister routinely claims that they're bringing debt down, and it's not true. They have actually yet to reduce the debt. So of course that will sort of annoy the statisticians and anyone who actually feels that you should be honest about statistics. But yes, he's meeting his rule.
Well. And the other slightly odd phraseology was, of course, as Conservatives, we know that lower taxes means higher growth. And, of course, you reverse that. The UK has high taxes and pretty low growth.
Well, and, of course, this still does show. He made a point of talking about how the effective tax rate had fallen. I'm actually looking at these numbers. I'm not quite sure how he's sustaining that, because, if anything, it looks like effective tax rate for most people has gone up with that really extraordinary decision to freeze the personal tax allowances for as long as they have. This is still a country that the tax ratio as a share of GDP is going to be higher than it's been for very years and for a long time, and indeed going up. On the spending side, I would say one thing I have noticed in the sort of tables of the Office for Budget Responsibility has put out. Yes, he has kept the spending envelope the same, which was, as we remember, he took 20 billion out of future spending plans when he cut taxes at the end of last year. Of course, what we should remember, given that the population is growing, and that's helping him in some ways, he's got more people paying tax, he's got more workers in the economy. If you're keeping the spending numbers the same, that means, less money per pupil in schools. If people start, it means per head, the real departmental spending, which is what's highlighted here, is actually continuing to fall over the next few years. So I think that's something which people will probably focus on over the next couple of days. He has benefited from an increase, a 300,000 increase in net migration forecast that the Office of Budget Responsibility is putting into these numbers. That does make these spending numbers even tighter. There is a reason why when the government says numbers are a record high, the budget's at a record high, we're hiring all these doctors, and people still feel services are squeezed, it's because our population is going up quite a lot.
Stephanie Flanders, Head of Bloomberg Economics and Government, thank you so much for joining us with your analysis of the budget announcements we had from the Chancellor. Slipping into studio behind Stephanie was John Stepek, editor of our Money Distilled newsletter, who's also been listening in with interest to all of these announcements. John, the question of tax cuts versus tax rises, we sort of tally them up to see how many have we got on either side. Does this look like a tax cutting budget to you?
The obvious one is NICs being cut by 2
National insurance contributions.
Yeah. Sorry, it's national insurance. The UK's other income tax, and I think that's quite a big deal for people. What I do wonder though is we didn't really get something that you would describe as a monumental rabbit out of the hat. I don't feel. I thought it was interesting that he decided to try and tackle the child benefit income charge. He tackled it in probably the way that I would least have liked to have seen, because it just introduced yet more complexity into the system. But at least now you can be, you're not in a situation where you can be a 20% income taxpayer and still be considered so rich that you should have your child benefit gradually taken away from you, which was actually the case up until now, because the 20% income tax threshold kicks in finishes at £50,270. And the child benefit started getting confiscated at 50,000. So I think that's kind of corrected a bit of an anomaly there. But overall, I don't think people are going to come away from this feeling, jubilant or particularly kind of excited about what's going on.
I was going to say, that's the next question, isn't it? We are months away potentially from the next general election. What's the front page of the newspapers going to look like tomorrow? What is the government going to be able to try to sell to voters?
I suppose what the front page of the newspaper won't look like tomorrow is Hunt crashes the gilts market and pushes up your mortgage. And I think actually that's pretty clearly what he was most bothered about.
Yes.
Because I think one thing that hasn't necessarily come up as much as it should is the other big factor in the other big economic factor, and as much as that matters for the next few months, is what the Bank of England does with interest rates, and also what markets do with interest rates, because those are the things that impact on people's mortgages and also on people's perceptions of mortgage costs. And that is a huge amount for a lot of people, and it's a huge amount for a lot of people who may or may not want to vote Tory at the next election. So Hunt was walking this tightrope in terms of, in an ideal world, he doesn't just want to be cutting taxes, he also wants to be seeing the Bank of England lower interest rates, and for people to stop having to sweat about what happens when they roll off their current fixed rate mortgage. So I think that was probably the other thing at the back of his mind in terms of, okay, I can't go crazy with the kind of tax cuts here.
A couple of interesting changes, and I know that you follow the housing market very closely as well. A couple of interesting changes in terms of tax around housing too. So the holiday furnished letting scheme is gone. The capital gains tax, though, on residential property is coming down, which is interesting when he pointed out the Treasury and the OBR actually agreed both that this was a good idea.
Yes. I mean, that's interesting. It's a kind of laugher curve thing, as he said. It's basically the idea that people have been sitting on properties they would otherwise sell because of the level of capital gains tax. And I think probably you could see this. On the one hand, he's taken away the holiday let status, which, I don't know what the numbers are in terms of what he would consider to be abuse of that. But, it's kind of a slightly populist measure. And on the other hand, you're cutting the percentage points by 4% on CGT. So if it does encourage more people to basically get out of the amateur landlord, amateur holiday home market, put their houses on the kind of market in those areas, maybe be more willing to kind of accept a slightly lower price because they don't have to pay so much CGT. It's kind of marginal stuff, but I guess it adds up at the margins. And again, it's nobody can kind of point out and say, oh, you're being really generous to landlords or second homeowners whenever he does this.
Yeah. In terms of the response from Keir Starmer, I thought he came out very, very strongly, didn't he? And you're talking about, what is the point of them? You're talking about the Conservative Party, party first, country second. But he did actually end up supporting a number of the measures. We support the cut to national insurance, and we're in favour of the NHS money. So, actually Starmer politically was hitting hard, but supported some of the Tory measures.
Incredibly hard balancing act, though, to stand up afterwards and sort of say, oh yeah, we like the sensible things, but we still think you're a bunch of rotters. That's not an easy job.
Yeah.
Okay. John Stepek, author of our Money Distilled newsletter, thank you very much for joining us with your analysis of what we've heard from both the Chancellor and the Labour leader Keir Starmer with today's announcements. And that's it from us for today. If you like the programme, don't forget to subscribe and give it 5 stars so other people can find it on Apple Podcasts, Spotify or wherever you listen.
This episode was produced by James Woolcock and Tiwa Adebayo, and our audio engineers were Maruful Hussain and Sean Guastamakia. I'm Caroline Hepker.
And I'm Stephen Carroll. We'll be back with more tomorrow. This is Bloomberg.
Bloomberg UK Politics. Listen weekdays at noon on DAB Digital Radio in London.